Did you know that the U.S. has 4% of the world's population, but uses 25% of the world's oil? You may ask yourself, why is this important? Well, oil prices are dropping tremendously, and we are going to talk about what you can expect in the future with this oil price drop in this video. For this project, our topic we chose was, why are oil prices low, and what can we expect in the future? The three main topics for our project are how we got to where we are in the oil market and where we are headed. Number two, economic consequences of those developments for the United States and for the world. And number three, the resulting geopolitical fallout and how policymakers should respond.
In order to further depict where the oil market is headed, we first need to take a look at how the market got to where it is today. There were three key observations from 2014 by the global head of commodities research, Edward Morse. The first was that the economy didn't grow the way that people anticipated it to be. So, in that case, demand was way less than expected, and the margin of error was near 700,000 barrels a day. The second observation was that in the first half of 2014, the Atlantic Basin moved from tightness to balance and then to oversupply. It eventually became a glut because the U.S. continued to reject enough of their imports because we had already produced enough ourselves. The third key observation of 2014 was the decision of Saudi Arabia to not cut production but to fight for their market share. They did not think that by cutting production that would benefit them at all. They believed that it would benefit their competitors in return. Some OPEC companies have been seen to disagree with each other, which led to idea that this might be the end of OPEC. Three key countries, including Iran, Venezuela, and Russia, have all been dramatically affected by the low oil prices today. These three countries base their income of their economy through oil prices. So with the oil prices being way low today, they are not generating enough revenue to pay for their government spending. Therefore, they are asking for Saudi Arabia to cut back on prices, but Saudi Arabia does not want to lose their market share, so they're willing to let the prices of oil go to as low as they can go. But projectors have seen that oil prices haven't hit rock bottom yet. They believe that by the end of 2015 that the prices will reach $15 less than they already are today. They believe also that the continuous fall will not make the producers stop producing. The U.S. will still continue to produce, and we will lose storage capacity. Now, with so much production happening still today and probably throughout the rest of the 2015 year, we will have several thousands of barrels of oil stuck in tanks. And this will cause way too much storage. The storage capacity will decrease, and we will not have enough storage for all of the oil still being produced. So analysts believe that by the end of 2015, after we had reached the very rock bottom, that demand will start to pick up and supply will start to decrease as a country begins to cut back on their production. But they do not believe that U.S. will be the first to cut back on their production. We do see that already a few oil rigs have already been shut down in the U.S., including stripper wells, as they call them, that produce only 1 barrel of oil a day. These wells, mostly in Oklahoma, are slowly declining. Now, the U.S. Energy Information Administration has projected that the Brent crude oil price will reach $75 a barrel by 2016, and that the West Texas Intermediate will reach $70 a barrel as well at the early 2016 stage. Now, it is seen that even though we think that we've hit rock bottom, we haven't, and that the oil prices are continuing to drop, but hopefully by the end of this year, we'll see a rise in oil prices.
Now we're going to talk about some of the effects the price of oil has on the economy. Price and availability of oil have a major effect on the economy. Some say that the increased price of oil, it led to the 2008 recession. The increased price of oil made it increasingly difficult for companies to afford to produce and get their products out to their consumers. That being said, cheap oil can also damage the economy because it can lead to job loss and an excess of oil.
I'm going to talk about geopolitical fallout and how policymakers should respond. Nations such as Russia and Iran, whose economies rely heavily on the production of oil, have been strongly impacted by the late decreases in oil prices. Saudi Arabia, on the other hand, the world's largest producer of oil, is refusing to slow their oil production due to an event back in the 1980s when they were called the swing producers, because they decreased their production of oil in order to stabilize the oil prices, and lost market share. So they refused to do that. Due to Saudi Arabia's money reserves, they can withstand the effects of the low oil prices a lot longer than their competitors such as Iran and Russia. Overall, the drop in oil prices is good for the U.S. economy. Therefore, policymakers in the U.S., I think, should continue to import oil at its low price, but be supportive of a deal with OPEC to slow oil production and raise prices in the long run.
In this video, we have talked about three main topics. Number one, where we are in the oil market and where we might be headed. Number two, the causes on the U.S. economy and the world economy. And number three, the geopolitical fallout and what policymakers ought to do to respond. Hopefully watching this video, you have learned the cause and effects of the low oil market. The current state of oil prices, as we discussed, is a global issue that is becoming widespread. This video has outlined the main focus of these problems. While these problems remain at large, the industry is anxious to see what the future has to hold. As President George Bush once said, the United States is addicted to oil.